All right, everybody, welcome back to the discount. I hope you are all having a wonderful weekend. Happy Sunday. We are here to break down all the major indices once again, recapping the last week, CPI week. It was a big week. There is a lot to go over. I'm going to update all of you on our current swing trades that we've actively posted in our Telegram channel. We are in there every single day, and you get to see how our call outs have been playing out. So where are these markets going for the week ahead, for the month ahead? What can we expect? Well, today we're going to cover the usual suspects: the S&P 500, the SPY, the NASDAQ, the QQQ, semiconductors, SMH, Russell 2000, IWM, and the majors in crypto, Bitcoin and Ethereum. What's going on? What's going to happen next? So as always, we're going to kick off with the daily chart of the SPY. So when we last came on here, we said things are looking toppy. We have this rising wedge type of topping pattern here. We had a reversal candle here. And as well on the SMH, which is one of our short trades. If you remember, we were talking about this for a long time. We started taking shorts towards the end of July, and we are up about 50% on those. So the spiders are doing the same thing. They are pulling back. They're consolidating. We don't know if this is going to be a larger correction just yet, but what we do know is that they found overhead resistance. They could not stay above this 786 retrace at about 451.79. So what we know now is until and unless they can get back above this important retrace here, it is bearish. If we see some type of rally here, okay, it still does not mean that the bull market is going to continue for the time being. Not saying from a macro perspective, I'm saying for the time being. I'm saying September, October. It is classic to see some type of pullback into these months, and the markets are into some heavy resistance. What is interesting is the spiders have yet to fill their all-important gap here at 442.46. That is a bullish sign. They should have filled this gap on one of these days, but they chose not to. So it means one of two things. It means they could be building energy, right, in this bearish flag type of pattern to go lower than the gap, right? We've got a lot of bid support up here, and that means they have to eat time off the clock to go lower. And my target here for the rest of the SPY put options that we called out in the Telegram channel is that 618 retrace at about 430, give or take. The bull case on this as well, we're not going to fill this gap because we are so bullish that we're going to close daily above here, and we're just going to continue and leave everybody in the dust. As you can see, it is kind of in this trend, so we'd not be surprised to see that at all. That's why we were playing this with put options and risking them to zero. So that's it for the SPY. For the QQQ, same thing. Look at this trend line. It broke down. We did not play put options on the QQQ, just on the SPY and the SMH. They were looking toppy, but all the same markets. So again, couldn't stay above its 786 retrace. Now it is coming back down to retest some more important areas. Oh, where are they today? Well, it just so happens there's another important pivot point right in between the 786 and the 618 retrace at about 364, we'll call it for argument's sake. It is also a pivot point. This candle right here, it took off in the other direction and found support. Markets love symmetry. Look how perfectly it is playing out, where it came down to the target right here in between these two important Fibonacci retracement levels, and now they're stalling out. So let's clean this up. Same thing as the SPY. If it's going to go ahead and chop here, we'd expect lower prices heading into September on the NASDAQ or QQQ. Now, if we add some indicators here, you can see it closed daily below its 50 period moving average. And what would it want next? Well, it would obviously want the 100 period moving average, which also is going to coincide with that 618 retrace and a big fat round number of 350. This is going to be the area where we're going to look to potentially go long. We will update you in the Telegram channel if and when we do, but this is a raging bull market until it is not. In between the 50 retrace, depending how steep and if even they're going to pull back this steep, but in between the 618 retrace at 350 and 330 is where we're going to judge if this bull market is going to continue or if it's going to break down and we're going to be looking potentially for larger positions on the short side. So stay tuned on that. Right now, we're just getting a healthy pullback in the markets, and we have some put options. Next up, beautiful, beautiful breakdown on the SMH, exactly as expected. If you remember from the previous video, this is a rising pattern, a topping pattern that should coincide with a breakdown to the downside. That's exactly what happened. Great job on that trade. Now, where is it going? Well, it's stalled out at our level right here at about 144 even. They should fill this gap at some point easily if markets are going to pull back, as well as this gap and this breakout area, 131.55 and 128 even. So that's what we expect here. It's all the same market right now, some more volatile than others. But if we are going to pull back, these levels should get hit, these gaps should get filled on the daily chart, and then we are going to reevaluate potentially playing the counter trend rally and resumption of the bull market. And last, for traditional markets, my favorite market leading indicator, the one market that we were long from right here. We were long right here at this retracement of the breakup candle for that breakout, retest, and explosion to the upside. This market has been lagging, small caps have been lagging, and rotation was coming in. And structurally, this is holding up well, in my opinion, and it's got a lot more room for upside. So the question will be, how far back does the IWM pull back, or is it just going to hold up while other markets are pulling back and it's going to resume? We're not sure, but what I can tell you is there is some type of trend line forming here. If we're going to bounce off of this and hold, that would be extremely bullish for the IWM. Potentially see a little bit of a spike here, consolidation while markets are pulling back heavily, but the small caps are not. And that would be a signal to go long small caps once again, and as well the NASDAQ and SPY. But let's see what we get here. If we come back down into this area, this breakout area, this is the scene of the crime, right? The scene of the crime where it broke out to the upside. We would be looking absolutely to play the long side once again. Ultimate upside target for the IWM for this run is going to be 203 and then 221 easily. So again, we'll notify everyone in the Telegram channel. As you can see here, it is completely free. We are updating everyone on our swing trades, weekly macro newsletter, live day trading room profits, and everything in between. So head on over here. It's completely free. You have nothing to lose. All right. And lastly, we are going to get into Bitcoin and Ethereum. These are setting up potentially for some really nice moves. And we are actively trading Bitcoin and Ethereum right now on Femex. It is a US friendly crypto trading platform. You can trade up to 100x leverage on crypto futures, which means you could deposit a small amount of money and get a lot of leverage for it. The platform is just like TradingView, super user friendly for traders. So head on over here. The link is in the description. If you have any questions, feel free to email us. We'll be happy to help you out. And we have partnered with Coin Market Manager. It is the #1 automated journaling and analytics tool for crypto traders. Simply connect your crypto exchange via API. And once you're done trading, whether it's for the day, the week, the month, you simply head into Coin Market Manager to analyze your trades, where you were wrong, where you were right, your win percentage, your risk reward, and how you can get better. If you're a trader, this is absolutely crucial. Whether you're doing it manually or not, you should be journaling. You could try this for 14 days, absolutely free. The link to Coin Market Manager is in the description. All right, so Bitcoin on the daily chart. The first thing that points out to me is this is just an absolutely beautiful consolidation pattern for a move in the other direction. The flip side is the indexes are pulling back. So is Bitcoin actually decoupling here and it's going to break out to the upside, or is it going to fake everyone out and retest some lower levels? The lower levels I have here are these important pivot points, which also coincide with Fibonacci retracement levels. So if you're a bull, you really don't want to see Bitcoin get below this 28,200 level, give or take. You want to see this hold up. A great entry for a long position would be that 28,200 level. I don't know at this point if it's going to give it to you. We have our spot longs on Bitcoin at this point. point, and we closed out a very small short trade. When it came up in here and spiked this downsloping consolidation trend line, and it gave us a retrace, we shorted this against the high and made a little bit of profit there. So nice trade. But for the larger move, what are we really looking for? Well, obviously, a retest of that 28,200 level would be amazing for an entry. But a lot of traders and a lot of people don't really want to see this get much below 29,000 and then 28,700. That is the most bullish scenario, staying above these levels and then breaking out. So if you're not trying to pinpoint an entry, this is an absolutely fine area to pick a long trade here and just dollar cost average into these levels for that resumption move and breakout move. Where would it be wrong? Again, where it's wrong is also where you would be lucky to get an entry for that move. You can widen your stops, and that's likely what we're going to do if we get some type of better entry here. Widening the stop so they don't run your stops to about 27,500, I think would be appropriate for the move to 32,000 and then ultimately 35,000, right? That would be a good risk reward, at least a 2-to-1 risk reward. And then if we get 35,000, even more, a 3-to-1 risk reward. So that's it on Bitcoin, guys. Let's see what we get. Right now, we have a lot of altcoin setups as well that are showing strength and consolidating. All of those altcoin setups are in the Telegram channel as well. Ethereum is the catch-up trade. We want to see Ethereum play catch-up in this scenario here. And if we do, we drew this little trend line here. It seemed to have broken out of this downtrend and in a similar position to Bitcoin, but it has a lot more upside. And what do I mean by that? Well, the risk reward here, you really don't want to see this break the trend line. So the risk reward is at about just shy under 1,800. At about 1,790, I would say, right? It would go right underneath this low right here. And the upside target is, for me at least, 2,200. When you look at that risk reward ratio, that is almost 9. So a great setup potentially on Ethereum. We'll see what we get, and we'll update everyone in the channel, of course. So nice and easy, quick and simple, guys. Common sense, technical analysis here, as always. Head on over to the Telegram channel if you're not in there already. Have a great rest of your Sunday, and we will see you on the charts.